What's up, market snipers? This is Jesse. It's a little after 3 p.m. on Thursday afternoon. I was going to do this closer to the daily close, but we have some developments here, and we're looking at the 12-hour chart for Bitcoin. Is it breaking out? It looks like it could be breaking out, but may not be making 2023 higher highs, right? So we do have a pending buy signal on the 12-hour chart. We've had a pending buy signal on the 8-hour chart. And then, of course, if we drop all the way down to the 4-hour chart, we had a buy signal on the last candle. So it went from pending to an actual buy signal. And now we've got a green trending dot as well on the 4-hour chart. So going back to the higher time frames, the lower time frames are letting us know. But also, even though I trade on the daily chart, I do take a peek at the lower time frames, and I want to know, as it's developing ahead of time, right? So 12-hour chart, you got a pending buy signal. Okay. So before we jump in, fully of what we're thinking the next moves are going to be, kind of doing a quick recap. And what I recommend is going back to the previous Bitcoin videos that I posted, whether through the newsletter, you can find them there, free newsletter, and or you can just go straight to the YouTube channel as well and find those Bitcoin videos too. So those are more based on like the daily and the weekly chart and the overall trend, because that's what I start with, right? And so going back, to middle of August, we were talking about, and even before that, for a month or two, we were talking about on the weekly chart signs of why Bitcoin could, go back down, prices above 29,000, could go back down, retest the 200-week moving average, and or below, hit other targets, and then find support, and then bounce to hit some of these retracement targets up to the upside, and then possibly roll back over. And so that's all based off of the weekly chart. And what we were looking at was the comparison to silver and gold. So silver and gold had played out very similarly to what we're talking about. So that kind of gave us the idea that, from here we could see, price come down, find support, price comes back up, and then price goes back down to hit the lower targets, right? So, the recap was we're in a short position. So we don't just talk about it on the charts, but actually took profit on this wick. And on that wick down, with the leverage, it was 130% return. So that was very good. I usually don't catch the bottom of the wick, and a lot of times I won't even catch the wick. But in this case, I was watching it very closely, and I did take profit on that wick, somewhere around there. And then price, as we know, was going sideways, and then there was a quick bounce up to hit target 1 and a key target number 2, which is just above the 200-week moving average, and then almost hit a key target 3. So target 2 and target 3 are I would call them like more key targets, because there was a couple of my favorite targets kind of like wrapped into one target on both of them. And then you got this target and you got this target as a possibility as well, right? So here we are on the 12-hour chart. And, what we're looking at here is basically the same thing to continue to possibly play out, is that we talked about way back here in August, was after coming down, find support, hit those 2 targets, yes, but we could see it come up, hit this target and roll over, right? Could come all the way back up, hit the 200-week moving average and this target and roll over. Come all the way back up, hit this target, roll over, and then all the way back up into this target as well and roll over. And so this would build out that lower high and build out that right shoulder, right? So if you go back to the videos on the weekly chart, you'll see what I'm talking about. I'm not going to go back through and do all the weekly chart on this. The video would become very long, and we want to keep this to about 7 to 10 minutes at the most. So again, we played this here, and then we're watching it, and now it looks like the 12-hour chart is pending buy signal. And I took a long position here as well. So we're going to be playing it to the upside. And if it looks like it's going to start reversing, then take profit. Of course, as soon as I feel comfortable, I'm going to be moving the stop loss to a break even point. So at that point, it becomes a risk-free trade. So the only thing I'd basically be risking is, any profit. But we're going to be once it's getting up to like target one, and we see some follow through, then that's probably when I'll make my move to move the stop loss to break even on the long position. And then if it starts breaking down, for example, from this trend line, right, then that's when I'd be looking to attack to the downside, assuming that the weekly chart is still bearish. Then as long as the weekly chart is still bearish and everything is just looking like it's either a short-term bounce, somewhere around here, or it continues higher and it's a bigger bounce, then considering those things would tell me to say, hey, it's time to take a short. And this trend line here would be kind of my trailing stop loss almost, right? So I already have that drawn out and ready to go. And just want to show you real quick on the daily chart what I was kind of watching for, over the past, couple weeks. It looks like, definitely in the last week, potential bullish divergence on the daily chart. So you can see here on, let me move this up so you can see it. But here, RSI closed on August 18th. It was the low for RSI. And if you follow that up, price closed right here at about $26,000. So after this move up here and it hit a couple of retracement targets, it closed here, price closed lower, but RSI closed higher. So when price closes lower and RSI closes higher, then that's bullish divergence. And I think where many traders and investors get discouraged and they kind of move away from divergence is they think that changes the entire trend. Maybe on the higher time frames, but not always in the lower time frames, right? And not even on the higher time frames. So sometimes it's a full trend change, and sometimes it's not. Sometimes it's just a matter of clearing out the divergence and then rolling back over, right? So if you knew that and you're knowing that using divergence, then you don't get discouraged and you don't get caught off guard. Because if you're holding a short position and your plan is to hold it long term because you think it's going to $20,000, then that bullish divergence on the shorter time frame where it just comes up and then kind of rolls back over and resets the divergence, then you probably get shaken out of your short position, and then you probably won't get back in if it was a longer term short. And the same thing if you're ultra bullish on the move up because of the bullish divergence and then price rolls over, you would also be discouraged. So it gets you on both sides. So knowing that one key aspect of divergence, really changes your mindset on divergence. And you can take a deep dive. We go over divergence in the recorded coaching videos it's more than an hour long. So if you want to take a deep dive, I kind of show all that stuff, but can't go through all that stuff here. Trying to keep this to about 10 minutes. So anyways, thanks for all of your support. I appreciate it. Please like, comment, subscribe, and then follow me on Twitter and share all the places you can. Helps keep me motivated when I see eyeballs on it. Makes me want to keep doing it for you guys and try to help this so we can snipe these markets together. Thank you, and I'll see you in the next one.